Camerato?
Yes.
Hey, everybody. I am here with Joseph Camerato, who is the founder and president of National Business Capital, who is going to be spending about 30 minutes with us asking and answering all of your questions around funding, creative capital. How do you really scale your company? The question that I feel is the most consistent from every entrepreneur I meet. You know, when I say, what's the one thing you need? Consistently, it's always money. So I know we need more than that, but you know, Joe, give us a little bit of background, where you're from, to get us to where you are now and why you started this company and how you get every entrepreneur struggles intimately.
Yeah, definitely. So I grew up in Connecticut and Long Island. Our company's based out of Long Island, New York. I came from the residential mortgage business, and I started working with a group of self-employed customers. And basically, I just recognized this challenge. This was 10 years ago in 2007 when we got started. I recognized this challenge that when someone went to a bank, a business owner went to a bank, if they were turned down, they really had no idea really to where to go from there. So I started to realize that there's a lot of different alternative lending options that are out there, but everyone has a different, appetite or industry that they work with or risk profile, and it can still be very, very confusing, time consuming, a lot of different type of paperwork. Everyone wants something different. So the whole idea of the company when we got started was to just simplify the financing process for small business owners. It started out locally here and then became, nationally today. And basically what we've done is we've grouped together and built relationships with over 50 to 70 lenders that we work with today. And each one of those lenders has a different, again, appetite and type of business that they want to work with. So what we've done is we've shortened up that process. We've made the application digital. We know exactly what documentations we need, whether you're a doctor's office or a restaurant owner or a wholesale manufacturer or a local contractor. Each one of those businesses might need a little bit something that's different. So when you work with us, we basically kind of understand your situation, understand your opportunity, what you're looking to get accomplished or challenge. And from there, we'll tell you exactly what you're going to need. We'll collect those documents along with you and application, and then we'll get it right into underwriting. And we do this all very quickly. We typically can have approvals within an hour to 24 hours, depending on the type of financing that we're going to approve. And then depending on the transaction, we can have you funded anywhere from 48 hours to 5 business days. If it's a commercial mortgage or an SBA loan, it'd be about 4 to 6 weeks, but which is still much shorter than usually dealing with the bank direct, or shopping around from lender to lender to lender. It can be very time consuming, almost exhausting. And business owners' time is very valuable. There's not enough time in the day to even sometimes work with us. We make it that quick and simple.
Having been an entrepreneur for all these years, I just did a video that a lot of people commented on. My one comment was, I wanted to create this technology platform, but I did not want to waste the time and energy to raise capital from a venture capitalist or a venture capital firm. And I'm friends with a lot of those people, but it's a time-consuming process. And it's like a full-time job in and of itself. So I got creative in how to create the capital in a very different way. So I just kind of back myself into my business model differently. So there's a couple great things that you said. First, I want to point out that you said that people can sometimes get their loan from you within an hour or two, like 48, 72 hours. That's almost unheard of. I mean, that to me is something that's going to blow people's minds of, wow. And that's part of the process that you simplify. I know when you guys were at the Jumpstart Connect store with us, people could fill something out right online, and I'm sure they could do that right now, right? They could go to your site and fill something out to get started.
Yep, absolutely. You go to nationalbusinesscapital.com and go right to apply now, and they start the process. And then the different thing about us is we utilize technology to speed things up, but we're still very big with the human touch.
Yeah.
And working with one of our funding advisors here, because we still need to understand your opportunity. We still want to talk with you, and we still want to walk you through the process. And there's a lot of questions that you might have as a business owner. So just utilizing straight technology and not having any human interaction, I don't think really works, especially in what we do. So we like to utilize both, and I think that's what separates us from a lot of the competition.
I will attest to that. I worked with your team at our Jumpstart store for a whole week, and they were just amazing. Everyone was super knowledgeable. Everyone was super cool. Everyone was super social. And it just made everybody feel, money can be really uncomfortable for people. It can be a sensitive subject. Some people could feel ashamed about it, even though it's just a totally normal place to be as an entrepreneur, not having enough cash flow. That everyone on your team made everyone feel safe and able to be vulnerable so that they could talk about it without feeling like they were getting judged. And that felt amazing to me. And I feel like that probably came from the top, from training from you and everybody else who are the leaders in the team, because that's something that I don't necessarily see at banks. Or in a lot of these pitch competitions around venture capitalists, sometimes it just is very uncomfortable that people really might need the capital. They just resist going down that path because they're just don't want to feel ashamed.
Yeah, it's funny. It's like an old school mentality. If you borrow money, that's a bad thing.
Yeah.
In any business that is growing or comes across opportunity, the truth of the matter is you need capital in order to grow, in order to take on that new client product line, buy a bunch of inventory and sell it, whatever, expand your medical practice, whatever it might be. All growing businesses need capital, and there's nothing wrong with that. If you're borrowing money and putting it to good use and you're growing your business, the cost of capital almost becomes irrelevant, but you just need it to grow, and it's extremely important.
I love that you just hit on a belief system. Doing what I do for a living, I talk about belief systems all the time because it's often our belief systems that hold us back from optimizing our potential. And there are a lot of belief systems around money. I'm sure you encounter from people on a daily basis, but that belief system that asking for money is a bad thing. And I even know, my dad is 84 years old, came from that depression era where asking for money meant you're weak, you're a failure. And so it was ingrained in me when I was young that asking for money was a bad thing. And it was something I really had to get over. And I remember reading Rich Dad, Poor Dad from Robert Kiyosaki young in my career. And it was one of those books that was like, no, using other people's money to become successful is the smart thing to do. Yep. That's what you should be doing. And I was like, whoa, this is like mind blowing. This just changed everything for me. So, you just attested to that, which is great, because using other people's money as leverage is really important. Sometimes you might have this incredible purchase order and you just don't have the capital to produce the product. And so you're the type of company that someone can come to and say, I have the purchase order, I have a factory, I have the product already as, proof. I just need some time, 90 days to manufacture it, get it shipped, delivered, and get paid.
Exactly. And that's something, that's one product that we offer, and it's something that we see constantly. And we see people that get these amazing offers. And this is going to be, the deal with whether it's Walmart or whatever other provider that's going to just take, get them to the next level. And it's great. And just being able to get one of those orders sometimes is a challenge within itself. But, being able to finance it is a whole nother thing. So that's where we can really come in and really work really well.
So you mentioned creative capital or, innovative capital strategies. So alternative is the exact word that you used. And so can you just give people a little bit of background of what alternative financing really means when you said it like that? Because I know some people just have 3 or 4 pockets that they put capital into. So if you could just give some backstory on that and tie it back into your company and how you can do what you do.
Yeah, so alternative really just means, to us, financing that comes from a non-bank lender. And there's a number of different products that we do offer that are alternative to bank financing, whether it's purchase order financing, credit lines, small business loan, term loans, equipment financing. And there's a number of different things that we offer that are just outside of what a bank will do or outside of a bank's credit and risk profile. So really, I think when we use the word alternative, it's just as simple that it's just outside of a bank.
Asked you at risk profile. Could you just say that again?
What was that?
I lost you when you said you look at a company's risk profile. You kind of froze for a second.
Yes.
Could you just pick up from there?
Yeah, sure. So basically what I was saying is that really when we view alternative financing, it is really just financing that's outside of, a bank and a bank's, risk and credit profile.
Right. So, just for people listening, instead of just looking at your credit score and your assets, which is traditionally the key markers for traditional funding from a traditional bank, they're able to look at different assets and movement of cash flow in your company that would give you leverage, that would give them opportunity to be able to say, we can back that and not feel that we're putting ourselves too much at risk. I remember even when I first launched my Leader Girls company, I got a licensing deal right out of the gate. So I already had a licensing deal with a company that was creating the Isaac Mizrahi brand for Target and some other huge brands. So although I didn't even have a tangible product yet when I got that licensing deal, but in order to get that licensing deal flowing, I needed some capital to really kind of mock up the different product and get different samples. And that would be something that would have been an ideal situation for you. Although I still didn't have the brand up and running, I had all these guarantees lined up. I just needed some cash flow to get me from here to there.
Yep. And we'll look at a number of different things, and you don't have to have real estate assets for us to get something completed for you. So there's a number of different things that we can look at, from cash flows to receivables, equipment, a number of different things. And so there's not one set requirement that we have, and every single business, is just different. Even a franchise business, each one of those individual businesses is different from each other.
Yeah, I just have a quick question on franchises, because I know a couple of people listening that is a path that they've either created or they're thinking about going. Yep. So a franchise, would that potentially be more minimized risk for you guys, since if they're potentially buying into a franchise that's already proven success as a model, it's a lot easier for you to digest than, hey, I've just created this model, right?
Yeah, we love franchises. We fund a lot of different franchises, from the food and beverage ones to the automotive franchises, gym franchises. So we definitely, we definitely appreciate franchises. Still depending on the franchise, can still, different franchises have, again, different risk profiles. But they have a nice proven record, and there's some support. And it's a really, franchises are great for someone that's looking to get into, starting a business, because a lot of structure and systems that are put in place, which is usually everyone's challenge with starting any business from scratch, is the structure and systems.
Yeah, structures and systems are huge. And if you can get them into place, you're going to minimize a lot of stress and risk. So I guess that's definitely something that you'd be evaluating. Can you give us, and I'm totally putting you on the spot for this, so everyone listening, no, I'm putting him on the spot for this. Before I put him on the spot, there is a question. Do you do small loans for new equipment for an existing business? For example, Eileen owns a Pilates studio that's already proven successful. And maybe Eileen, this is not at all what you're asking, but I'm giving this in theory, and maybe she wanted a couple more reformers.
Yeah, absolutely. That's exactly something that we would do. An existing business, new equipment, absolutely. The terms could be anywhere from 2 to 5 years with a monthly payment. And we even have products where you don't have to put any money down. So that's absolutely something that we can do. And I'd love to talk with Eileen offline, and I can connect her with one of the team members that would absolutely be able to help her to do that. It's exactly a specific thing that we do.
So what I'm going to do at the end of this on my Facebook page is put the email address that you want people to reach out to for all these follow-up questions after this. And that was great. I mean, for some of these deals, you won't even have to put money down, where someone like Eileen could be thinking, well, I'm going to at least have to take like $25,000 to $5,000 minimum out of my bank account right now in order to get this going. So that's incredible. Yep. What would you say for, I know this is such a variable, this is still not the putting you on the spot question, by the way. This is a variable too, but what is like an average interest rate that someone could be expecting to pay at this stage in the game for some types of loans? Obviously that's a moving target. It matters on what's going on in the whole state of the world. And also how much you're putting against it, right? If you're putting nothing down, it's going to be more.
Yep. So, I mean, that really can vary from one end to another. If it's something that's going to be an SBA transaction, then your rates are going to be somewhere in that 6% range. And then they can go, up from there, just really depending on the deal. And then again, the risk profile. Type of, whether there's collateral not involved. And again, we don't need collateral. Our equipment deals can be anywhere from 6 to 8 to, 10%. And then our unsecured deals with no equipment, not equipment backed or real estate backed, can go a little bit up from there.
You said 6 to 8, just to give people a relative perspective. If you're charging, which a lot of people do, much of your business expense on a credit card and you're not able to pay them off, you could be paying up to like 20 to 22%, come up to 24% loan. So, interest rate. So that is such a better option than racking up those credit card fees.
Yeah, the thing that's interesting about that, and even if you had to pay a higher rate on a business loan transaction that was unsecured, with credit cards, the interest, you can't write off. And then on a business transaction, you can. But, they're not structured repayments. They give you a monthly minimum payment. But if you really get past year one and you're still holding that balance and nothing, the principal balance hasn't, gone down. Once you go into like year 2 and 3, what you're paying in interest can really, can get a little out of control. And then you're not really building a relationship with, some sort of a lender,
right,
that will really be there with you as you look to grow.
Yeah, absolutely. And I'm sorry, did I just hear you correctly? Something for people to also pay attention to is the difference between a very specific business loan and a credit card that you just racked up all your bills up on. There's a potentially different tax structure where you'll be able to write off more in the very specific business loan than from the credit card loan. So that's something everyone should pay attention to as they're exploring the different options, correct?
Correct. And that's absolutely something that you should consult with your accountant about, but that's something that your accountant actually, would be able to, reconfirm and kind of, explain that in a little bit more detail.
So I have a question from Misty. She said, I read an article a few years ago about flexible franchising emergence where owners had more flexibility. Is this really a possibility? And when looking into structuring of a franchise to help me make a smart choice when crafting my brand so it's duplicable, everything seems so detailed in a mandatory way. Is there room for a flexible franchise model where owners have some freedom? So we had addressed like the systems being in place, which is, something people are paying for. So I work, often with different franchise brands. You probably work with them a lot more than me. So are you seeing this more flexible franchise emergence?
As far as flexible, meaning what?
Meaning not as much system in place where you can't divert from the system. It's a catch-22 from a branding standpoint, Misty, because when the systems are in place, it's to help not dilute your brand so someone can't make poor decisions. And imagine from a finance standpoint, who knows? Someone can make even cooler decisions. But for the most part, I know every franchise owner that I know that created a brand makes those systems so rigid and mandatory so that their brand doesn't get diluted. From a franchising standpoint, from a financing standpoint, I'd imagine it's safer for you to work off of a solid mandatory model.
Yeah, it definitely can be, and there's still risks involved because if the owner still is not following the model, and building their business, there's still risks that can be involved. But definitely just being able, on the franchise side, just being able to come into a business that already has, those systems, thought out and put in place and built out. We had to build out systems in our business and there were none in the beginning. So we had to build them from scratch, and it's just very time consuming and very very costly, but that makes us who we are today. So it's extremely important.
Right.
And I can see that if, a lot of business owners just don't necessarily in the beginning have the time or money to put into building out systems, and that's just going to give you the ability to be able to scale and manage the business, which is extremely important. So if you're a first-time business owner, a franchise really, kind of helps lay out that structure, and really just makes it extremely easier in the beginning to just stay focused on building the business, hiring employees, and things like that.
Which is a job in and of itself often. So, I just want to reiterate to everyone listening, because there's a bunch of entrepreneurs in here, and some of them are newer companies. One of the things I wish I had learned earlier on in my entrepreneurial life, is systems are everything. Everything. And how do you systematize? Like, I walk around now, like every little thing I do, every action I do, how do I systematize this? How do I put this into a duplicable action? So like we talked about how you could go to your website right now, nationalbusinesscapital.com, and fill out a form so that they could begin the process of getting qualified for a loan. That's a system that you put in place so that they didn't have to wait to get matched with somebody to get a phone. Maybe they're playing phone tag and all these things happen while you still have customer service built in. It doesn't slow down the process to get this started.
Yep, correct. Yep, it's extremely important. There's actually a really great book that I like to recommend.
Yeah.
Listening, since they're small business owners and entrepreneurs, that we read early on when we got started. It's called The E-Myth Revisited by Michael Gerber.
Yeah, it's a good one.
And that whole book really just changed the way we looked at our business. And I think, was definitely played a big part in a certain part of our success, but really got us thinking about looking at our business like a franchise, treating it like a franchise, building out systems, and putting the right things in place. If you haven't read that book and you own a business or thinking about owning a business, it's definitely one of the best books that I've ever read, that, going back to my business.
Agreed. My business partner gave that to me. This was back in probably late 90s, early 2000s when it first came out, the first version of it came out, because it rocked his world so much, where he was like, whoa, we're like walking around Harry Carey, like just doing stuff, and we're not duplicating ourselves. And he forced it upon me, but I received greatly from that moment forward. So I have a question, because we have some Canadians on here. Is there any benefit in alliance with your company if Canadians are interested in services that you're offering? Because inquiring minds want to know.
Yeah, we actually we can actually help people in Canada. Help people in Canada, some in the UK, and even Puerto Rico. Right now, unfortunately, that might be a little difficult. But yes, we can help people in Canada. And if anyone listening today can feel free to reach out to us about that.
All right, great. And again, I will put the links in, and Brett just asked if I could put the links in the comments as well. So I would totally put the links in and email addresses for you to reach out to. So if anyone has any more questions, I only have a few more minutes with Joe here because he's super busy, because so many people need loans all the time. But before, if everyone wants to ask a question, I'm going to give them a chance, and I'm going to hit you with the one that I keep dangling that I'm putting you on the spot for. But can you think of just one or two really cool stories of companies that you worked with where people came in? Everyone loves these, like, was in the final moment. How many entrepreneurs feel like giving up and feel like this is it, I'm done, this is my last chance, and then they come to you, and then this awesome turnaround story happens?
Yeah, it's a great question, and we do have a lot of those stories, and I really love and appreciate those stories.
Again, I'm totally putting Joe on the spot, because this is something I would have wanted to thought through first, but it came to me.
Yeah, I'm sitting here trying to think. I mean, there's always challenges in business too, so you just have to keep fighting through them. And you sometimes take 10 steps, forward, and then you get knocked back 5, and you have to take another 5 steps back to get another 10 steps forward, and those challenges never really stop. But we recently just helped someone that really just had a tragic situation happen in their business. They owned a few salons, and I think they were pretty close to one of the hurricane areas that really put a big hamper on their business. And if we weren't able to help get them, financing done very quickly, they were going to have a big challenge with payroll and some other things. And we were able to make it happen. We were able to get them funded in, I think, like 48 to 72 hours.
Wow. Just
in time to meet payroll. So, and it was the woman was a really great woman. She owned the business for many years, never missed a payroll. It was very, very important to her. And that was, that was one of those stories that really just hit home. And she was like so happy. She was, she was almost in tears. But that was one of those unique situations that we come across from time to time. Mm-hmm. And then on the opportunity side, we've helped finance a lot of people get additional locations. There's a video on our website from an Orange Theory Fitness, which a lot of people know, that we helped finance some additional locations. When they started with us, they had like four or five locations. It's in the video. And I think they're up to like 8 locations now, which is really, really cool.
That's it? I feel like there's so many more. I feel like everyone's checking into one.
Well, that's a franchise. So they own those individual ones. There's
right. Oh, okay.
There's many more Orange Theory Fitness across the country, but this one owns those in particular, franchises. And they were at 3 to 4 when they came to us. They opened up their 5th, 6th, and I think they're up to like 8 now, which is just, it's awesome to see.
Yeah, that is awesome. It's a proven theory over and over again. So I appreciate your time. I'm going to put your resources in the links in the comment section, because I know that one of the most important things, and I help all the people that I coach and mentor, is building your team. And you might not need your team at the moment. It's like the Jumpstart store. When people walk in, they're meeting publicists, and they're meeting email marketing strategists, and they're meeting somebody like you for funding, and you might not need it in that very moment.
Yep.
But you should build a database that kind of earmarks who your team will be when you need them. And so you're definitely one of the players on the team that I suggest to every person that I meet now, because working with you guys has been such an incredible pleasure. The ability of what your capabilities of what you're able to help small business owners with are by far one of the most important resources that entrepreneurs need. So even if you don't, everyone listening, even if you don't need capital now, keeping National Business Capital in mind and Joe's information, the information of some of his team, is going to be really important just to have at your fingertips when, God forbid, you have one of those payroll moments like that woman did, where you're like, oh my gosh, I don't know if we're going to cover payroll this week. And they could be somebody that could help you in a 72-hour pinch, right? So, are there any last words, anything that you want to give people, advice, anything, any other information?
No, I think we covered a lot today. Again, as I mentioned, there's always challenges in business. Just keep on trucking and, focus on working on your business and try to get out of the day-to-day so you can focus on building it and growing it. And really, if you haven't read that book or read it, again, it really, it made me look at my business, completely, different. And if if anyone out there needs help, obtaining financing for whatever needs they might have in their business, please feel free to reach out to us. We'd be more than happy to help and walk you through the process. We don't charge anything to speak with you. We're a very easy to work with type of company. We'll lay out the options and you can kind of take it from there.
Very non-corporate, I would like to say. Very non-corporate. It's like just a bunch of people that want to help people, and there's a lot of community vibe to your company, which I love. So thanks again so much, Joe. We really appreciate your time, advice, and look forward to having you on more and getting more people the funding that they need.
Thank you, Jen. I appreciate it. Same to you.
Excellent. Thanks. Take care.
You too. Take care now. Bye-bye.